Okay, so good morning, everybody. What we're going to do is we're going to talk about lesson 4, which is property insurance. What does it do? How do we calculate it? And that's basically what the topic is for today. So when we look at the property insurance, let's talk about the goals for today first. Okay? Goals for today. Our goals is to understand how the type of insurance, type of policy, type of insurance, and the amount of property insurance affects the cost of the property insurance. So the type of policy, okay, there's two different kinds. We will talk about those two. And the amount of insurance that we buy affects the cost of property insurance. It's called a premium. Okay. Number 2, calculate the annual. Okay, what does the word annual mean? Yearly. Annual yearly premium for tenant insurance, because there's a difference between tenant insurance and then tenant means somebody who's renting a property, right? And then there's calculate the annual premium or yearly premium for a homeowner's insurance. Okay, homeowner insurance means somebody who owns the home. What's the difference between those two? Understand the difference between different deductibles. So we will talk about deductibles. And then determine the amount paid for an approved claim. Determine the amount paid for an approved claim. So let's take a look. What is a property insurance? So property insurance protects the owner of the property from financial loss in the event of damage to or complete loss of their house and belongings. So it protects a financial loss. Well, what does it mean, financial loss? In event of damage to or complete loss of their home. Well, can you think of an instant where a damage can happen to a home? Flooding, right?
Fire.
Flooding, fire, yeah. Vandalism, the thieves coming in, breaking into the door or window, right? And that also loss of property and that damage, yeah. So as you can see here, there could be a fire and it could only damage a portion of the home, right? Or there could be a fire and it takes a whole house, a complete loss. Now, how do a person recover from that, right? Because if somebody loses their house, right? Well, it's lost? No. They should have insurance, right? Everybody needs to have an insurance to protect from financial loss, to recover it back. Banks will not release the money for a mortgage until the proof of property insurance is given. In short, the bank wants to make sure the property is insured while they still owe money from it. If it burns down, the bank will want the house rebuilt. Okay? So, and also, it's not just the bank that wants the house to be rebuilt. It's us. We want our house to be back. Well, not exactly how it was, but you want the house again, right? So it should be noted that tenants or renters, so when you see tenant, it's those people who are renting the house, might also wish to insure their belongings with property insurance. Okay, well, why would a tenant who is renting want to have an insurance?
Because they relied on the homeowner.
What's that?
They relied on the homeowner.
They relied.
So, in case, say, a fire takes a house, that's their property also.
Mm-hmm. So if the fire takes the house, and let's say I'm renting, the
street doesn't cover it.
yeah, they don't cover the inside stuff. right? For the renter.
Responsibility to get the insurance.
Right.
The homeowner will just cover for the building itself and property.
Yes, absolutely.
Their property.
Their property, the physical structure of the house, right? Yeah, because I'm gonna be, if I move in, I want my stuff to be insured. So in case of fire, in case of flooding, right? If there's a fire, I want my restored. Okay, I need a new couch, or I need my new TV and all that stuff, right? That's what the rental insurance is, or tenant insurance. To insure belongings, the belongings, stuff inside. The main difference is that tenants are only insuring the contents. So tenants are only insuring the contents. Those are the stuff inside. While the homeowner must cover the building, homeowner, as well as the contents, right? So if somebody owns a house, they have to insure both the stuff in the inside of the house and the actual physical structure of the house. So charts showing annual rates for different types of insurance. Okay, now we'll talk about charts. Okay, when we see charts, kind of see data, right? So, and this is for annual rates. Okay, this is not monthly, it's for whole year. So let's see here. Okay, so this is the table, and it's very specific. It says tenant. Tenant means renters. Okay, so this is what the table is gonna look like. And then on the flip side, okay, so on page 20, you would actually see homeowners insurance. Homeowners insurance. So there's two different insurance tables that we will look at, and that varies depending on whether somebody is renting or somebody is owning the house. So let's take a look. These are the factors. Okay, these are the factors that will affect the amount of insurance. Okay, so so the first one is location. Okay, well, what does that mean? Okay, it says here, location. The closer you are to the fire hydrants or fire station, the less you pay in insurance. Okay, stop right there. Why does the location of the fire hydrant and the fire station important?
Because it's more easier for a fire department to get there and put out a fire.
Yeah, so in case of fire, right?
Yeah.
It's
Limitation of damage.
yeah. You want to minimize the damage, limit the damage, right? Now, if you look at your the streets around here, normal streets in Winnipeg, every few houses there's a fire hydrant. Yes, and then you walk down the road, there's another fire hydrant. So yeah, that one is so that we have easy access to resources like water to put out the fire, right? Fire stations. There's fire stations all over Winnipeg, right? And those are the people who respond to the fire when you call 911. Now, if somebody lives outside the city, okay, can you imagine? Anybody here had lived outside the city before? Okay, yeah, some people did. It's there's no fire hydrant close by, right? So when you call 911 or calls a fire, right? The truck has to carry those loads of water to put out the fire.
Oh yeah.
And then it takes time for them to get to your property, and then by the time they get there, it takes minutes to damage the whole house. Okay, so the damage has already been done. Okay, so can you think about that? Okay, location is important. Closer you are to fire hydrant or fire station, the less money you pay. Now, number 2, coverage. Now, there's different kinds of coverage. There's a standard or comprehensive coverage. So what's the difference between the two? So it's like a basic and more like an upgraded type. That's what the difference is. So comprehensive insurance provides coverage against more hazard and therefore a higher premium. So when you think about the standard, it's the basic insurance, and then comprehensive is more like an upgraded insurance. So comprehensive is more expensive. Okay. Number 3, deductible. Deductible, what is a deductible? The insurance deductible is the amount that you have to pay before the insurance company will pay the claim, your claim. So the insurance deductible is the amount that you have to pay before the insurance company will pay your claim. So in real life, there are many deductible levels. The common deductibles are $1,000, $500, or $200. Now, this is the funny thing is, the lower deductible makes the insurance premium increase. Okay. Now, before I'm like thinking, no, isn't it supposed to be high deductible, high insurance? No, it's the other way around, and I'll show you why. Okay, I'll show you why. So, let's say a fire happened in our property, and it cost, oh, this is like $2,000. Okay, it's a small fire. It's probably $2,000 damage. So that means I'm gonna make a claim for $2,000, and the insurance says, okay, yeah, go ahead, it's good. Yeah, deductible is what I am responsible for. Okay, so I pay, insurance pays. Okay, so this is the one that I pay for is the deductible. Okay, so I pay first. So if my deductible is $200, how much would the insurance pay? Okay, it has to cover all the damage. I pay $200, insurance pays $1,800. Okay, now if my deductible is $500, I pay $500. How much does the insurance pay? $1,500. If my deductible is $1,000, how much does the insurance pay? The other $1,000. Okay, so as you can see, it costs more money for the insurance if my deductible is low. Right? It costs more money for the insurance if my deductible is low. That's why it says low deductible, it would cost more money because insurance pays more money if there's a claim. Okay? Is that okay? Low deductible, high insurance premium. Okay.
So that's why they fight with you to have you pay the higher amount.
Yeah. Or sometimes yeah. And it's a matter of choice because they're gonna charge us no matter what. It's either I pay $500 now, and then the insurance just pay $1,500. Yeah. Same thing with AutoPack, right? AutoPack is $500 and $200 deductibles too.
Yeah, with AutoPack they did that to me also. With AutoPack they did that with me also.
Oh yeah.
So I had to put my foot down.
Yeah. Yeah. This one here is for when we calculate it, we will calculate it for the annual rates for the whole year. Yeah, we could pay property tax once a year, or if we choose to, we can pay it every month. Yeah. Did I answer your question? Yeah. So this is annual rate. Annual rate means every year you pay property tax, or sorry, not property tax, insurance. Okay, property insurance, or yeah, you can pay every month if you want to. Yeah. Okay, number 4, discounts. Okay, everybody, if you're a Manitoba and if you're a Winnipegger, you love discounts, right? I love discounts. Everybody wants a good deal. So how do you get a discount? So here it is. Many policies include different types of discounts. So some of these include installing fire alarm. So if there's a fire alarm in your house, or yeah, in your house, we get a discount, right? That's a good thing. Burglar alarm, right? Those are the a system. So if somebody breaks into your house, the alarm will go off, right? Carbon monoxide detector. Okay, claims-free discount. So if you have so many years of not having any claim, okay, no damages, no fire, no theft, that's a claims-free discount. Okay, oh yeah, well, it's been good so far, right? And then an age discount. So if somebody who's like 65 years or older, I think, they get a discount. Okay, so make sure to ask about discounts when buying insurance for yourself. So ask for discount. So note, currently 7% is applied to all property insurance premium. Okay, so PST 7% is applied to all premiums. Okay. No GST. Yeah, no GST.
Wouldn't the age discount mean for the age of the house?
No, the age of the house will get factored with the amount of coverage. Yeah, too. But this one is like age discount. It's like when somebody who is like the age of the person who are buying the insurance. Okay. Is that good? So let's take a look at this one. So if we're just looking at the tenant's insurance, so the only two things that we're looking for are coverage amount. So how much coverage do we need to buy, or standard and comprehensive. Okay, those are the only two things. And then if you take a look at this, up to 75,000, and then here we don't have anything after that. Each additional would be $1,000. For each additional $1,000, we have to pay extra $4.50. And then it says here, this table is for $500 deductible. So all of these amounts are for $500 deductible. Now, if we want a $200 deductible, we have to increase it by 10% more. Okay? So leave it alone and we'll talk about that in a second. So take a closer look at 3 important insurance terms. Premiums. Premiums, an insurance premium is the amount you pay. So this is on page 21. Amount that you pay in order to be covered by insurance. So that's the insurance premium may go up or down from year to year as the value of your house and belongings change. It will normally go up a little each year to cover the increased cost of construction to replace your house if the worst should happen. Okay? So that's the premium, that's the amount that we have to pay for to have an insurance. The deductible, we talked about deductible, it is the amount that you have to pay to give to your insurance company first before your insurance company will honor any claim made. Deductibles exist so that people do not make claims for small amounts of money. If your house burns down, you would definitely pay $500 $500 to have your house replaced. Oh, isn't that kind of a small amount to pay to replace your whole house? However, if there's a fire that is worth $300 damage to your bathroom, you would not pay $500 to get your insurance company to repair the damage. You would have to arrange the damage and repair itself for the $300 because it's cheaper. So, this is what we were talking about earlier, right? Now, if let's say the damage is $300, this is the damage, right? Your deductible, let's say your deductible is $500. We're not going to make a claim. We're not going to make a claim for that because our deductible is bigger than the damage. So it's better to just fix it ourselves. Does that make sense? Right? So, okay, claims-free discount. You will usually get a discount on your insurance if you are claims-free, meaning that you have not made an insurance claim before. This deters people from making claims for small amounts of damages. If they do make a claim, they lose the discount. So some of the amounts are typically 5 years. If you do not make any claim, you go back to being claims-free. Okay, claims-free, that means no damages that the insurance have to pay for. Okay, now let's take a look at some examples in here. Let's see how far we get. Okay. Example number 1. Oh, it's almost like Shalana's name. Shania owns a home. Shania did not move, but in 2018, her house insurance premium was $150, less than what she paid in 2017. Provide many reasons why you can think of to explain why her premium was lower in 2018. So Shania still stays in her home, but then in 2018, her insurance is $150 less. What could be the reason why she pays less insurance this time around? Oh, okay. Yeah, probably claims free. Okay. Probably claims free. Claims free discount. Okay. So maybe she got entitled for claims free discount. Okay. Anything else? What could possibly the discounts? It could be that she probably installed alarms, right? Fire alarm, burglar alarm. Or burglar alarm. Or maybe she got entitled for age discount. Could be. Maybe she got, okay. She didn't move, she didn't do anything. Maybe she had a claims free, she installed an alarm, or she maybe was entitled for an age discount. Is that okay? Yeah. Good. Example number 2. Let's see here. Sophia pays $1,350 each year for her home insurance. She has a $500 deductible. If she makes no claims any single year, she receives a 15% discount on her next year's premium. Okay, so she pays $1,350 each year. She has $500 deductible. If she makes no claim any single year, she get a discount for the next year. In the first year, she made no claims. In the second year, she had to make a claim. Calculate the total amount that she had to pay to the insurance over the 2 years. So, okay, first year, how much is her insurance? Okay, it's $13.50. Is that okay? And then the second year, okay, on the first year she pays $13.50. Now on the second year, okay, on the second year she had to make a claim. Okay, so what would be her insurance for the following year? So this is her first year, and then she said if she makes no claim during any single year, she receives 15% discount on her next premium. Now, on her first year, there's no claim here, right? So that means on the second year, she gets 15% discount. Okay, so the discount is for the following year, for the next year. So she no claim free here. That means she gets a discount the following year. Okay, so how much is a discount? 15% on, okay, so 15% off, right? So, well, how much is 15% off? Discount would be is 15%.
So you decide.
So you go
$13.50 with 15.
okay. Oh, we go 15%. So 15% means 15 per 100. Okay, so 15% means per 100 times how much is her $13.50? Okay. So when we talked about this last semester, right, discounts, so 15%, so 15.15 times $13.50. So her discount is $202.50. That's a discount. So how much is her second year? How much is the $13.50? So $13.50 minus $202.50. So now she has to pay on the second year $1,147.50. Okay. So how much is her total insurance? Total insurance. Okay, so on her first year, her insurance was $13.50. On the second year, she gets entitled for a discount. So now she pays $1147.50. Okay, so how much is that one? So it's going to be $2497.50 that she paid for the 2 years. Yeah, you okay? Now, they didn't ask the third year. How much will she pay in the third year? Do you think she's gonna have an discount the following year? It says here, first year, no claims. On the first year, and then on the second year, she had to make a claim. Then she get a discount because of the previous year. Discount from the previous year, but then because of the second year, she had a claim. The third year, she would lose the discount. Is that okay? So, they didn't ask that, so. Is that good? Yeah? Does that make sense? So what they do is like they give you a discount for being good, right? Right. So you were good last year, so you're gonna get a discount the following year. So if you were good then the first year, you're gonna get this discount on the second year. And then this is on the second year, something happened. So you lose a discount on the third year. Is that okay? So let's take a look at example 3. Oh, Manicum has $40,000 worth of tenant's insurance on his belongings in his apartment. If a fire does $6,000 damage to his belongings, how much will the insurance give him after he pays his deductible? Okay. So this is it's gonna be weird, right? So that after he pays, how much will the insurance give him after he pays the deductible? So this is what happens, okay? How much is the damage? 6,000, right? So this is the Manicum. This is the insurance company. How much is the damage? 6,000. Okay. So 6,000 is the damage. How much is Manicum gives the insurance the deductible. Okay. Manicum gives the insurance a deductible. So that's how much? Whatever, 500, it could be 200. And then the insurance company gives him the full amount. So gives him the $6,000. Okay. So if the fire caused $6,000 worth of damage, how much will the insurance company give him after he pays his deductible? It's going to be $6,000. If a fire does $50,000 worth of damage to his belongings, how much will the insurance company will give him after he pays his deductible? Okay. The same thing happens, so $50,000. So first, he gives a deductible to the insurance, and then the insurance will give him the whole amount. So $50,000. How much should the insurance really cover? It's only really 50,000 minus the deductible. Okay, is that good? Okay, let's take a look at example 4. Walter and Jesse live in 2 houses, one that are right beside each other. They pay different amounts of insurance premium. Brainstorm why they pay different amounts for their home insurance. Why could there be two?
Age difference?
Okay, age difference. Maybe there's like one person gets an age discount and the other person doesn't. What could it be? Why would they have 2 different?
Deductible price.
Yeah, different deductibles. Yeah. There are different deductibles. Okay. Perhaps one has alarm system. Alarm system. The other one doesn't. Okay. What could be the other one? Maybe the other one has claims-free discount. Maybe one has claims-free discount. This one should be asked at the end. Maybe one has the basic insurance and the other one has comprehensive. The other one has standard. And another has comprehensive. Okay, so I mean, just because you're neighbors, that doesn't mean you have the same insurance, right? And then the last one, different coverage amount. Right? That's where maybe the other house has a garage, the other one doesn't. Well, the garage is still part of your property, so different coverage amount. So these are the possible reasons why they're all different. Okay. So far so good? Oh, this is gonna be a long one. So let's take a look at, oh, is it too much or is it too fast? Yeah, okay. Yes, thank you. So I'll give you a moment to copy that down. We'll talk about the other one. No, I don't know.
Breaking Bad.
Oh, maybe.
She's got kicked out of those.
The writers of our stuff have a great sense of humor.
So they do incorporate some humor into the text.
Exactly.
Have you found some? Yeah. Have you found that? A little?
I didn't, yeah.
Or you did?
No, I didn't. No.
Okay. Different tools, counts, system.
Oh crap, I just caught that.
Right? Yeah, that's a way of just thinking. Maybe one is the standard and the other.
Has comprehensive insurance.
Yeah.
Okay, is that good? Can I move it to the next page? Okay. Now the next one, we're actually getting to the calculation part. Okay. So it says here, notes on calculating premium. The tables we will use in class show the premiums for a person who selects $500 deductible. So if we have to pay $200 deductible, it's going to cost 10% more. Okay, 10% more. And then don't forget the PST on all insurance premiums. Your final step for each calculation where the calculation insurance is to apply PST to the cost. So let's take a look. Joanne rents an apartment and is looking to purchase a $65,000 worth of standard insurance with $500 deductible. Calculate the tenant's insurance. Okay, now this is a tenant insurance. So flip it to the tenant insurance. We're going to flipping back and forth here. So what does it say? Tenant insurance, $500 deductible, and we need $65,000. Standard. Okay. So we're looking at the right table. So $500 deductible, $65,000. 315. Is everybody okay with that one? Yeah? Yes, you're okay? Or no? Okay, let's take a look again. It's renting an apartment. That we need a tenant. Okay? Tenant, renters. It's purchasing a $65,000, so we're $65,000, so $65,000 coverage is right there. Okay? What does it say? With standard insurance, okay? So $65,000. This column is for standard insurance, and then this is for comprehensive. We want standard, so 315. And then what else? Sorry, we're going back and forth here. And it's $500 deductible. So because it's $500 deductible, no increase, right? So the amount is $315. Now, oh, this is annually. This is annual already. For the table, it's for annual. Now, because we need to put in the 7% tax times 1.07. That's a 7% tax. So 315 times 1.07. Oh yeah, you can go 0.07 and then you will just add it at the end. And this one is just a one step. So it's 337.05. Okay. So this is for including the PST. 7%. So timesing it by multiplying it by 1.07. And then this is for annually, okay? So, this is already annual. One time.
So we add the 1 from the decimal because of it costs 10%.
No. So here we go. If we just figure out 7% PST, so we go 0.07 times 315. So this one is just the PST. So we have to add the 315. So add 315 on top of, yeah.
Okay. So
Yeah.
a simpler formula is.
Yeah, so this one here is just a one step thing to figure out the total amount.
So it throws a 315 along with the 7%.
Correct,
Yes.
yeah. So this includes the 315 and then the 7% tax. Okay? Is that good? Okay, take a look at example 6 and we'll probably stop right here. Okay? Jin Woo is renting an apartment. Okay, renting again. His insurance broker helps him to determine that he requires $90,000 in tenant insurance. Jin Woo chooses comprehensive, $200 deductible. Okay. Whoa, okay. What's our thing? Renting an apartment, so we have to choose. Okay, I'm gonna go back and forth here. Tenant insurance, right? Jin Woo. Okay, so we're gonna look at the tenant insurance. What else did they say? He requires $90,000 coverage. Oh, okay. There's a problem here. Oh, it only goes up to 75,000, right? Huh? Oh, the next page. This is not for that one. This is for homeowners. Yeah. So what we're gonna do is how much is additional do we need? Okay. For each additional, it's $1,000. It's $4.50 per thousand. Okay. And they want comprehensive $200 deductible. Okay, loaded question. Start off with the, okay, renting apartment. So up to 75,000 insurance, how much does it cost? Up to 75,000, what is it? Comprehensive is 454. Okay, so $454. Okay, so that's only 75,000. How much more do we need to make it 90?
15.
So, next, $15,000. Okay, so how much do we have to pay for the next 15,000? It's going to be, how much is it? $4.50.
No, $5. Because
Oh, sorry, $5.50. So $5.50 per thousand. So $5.50 per thousand times how much? 15,000. So how much is that one? 550 divided by 1,000 times 15,000 is 82.50. Okay, so this is a loaded question. Loaded question. Okay, so far so good? Is everybody okay? So our table only goes up to 75,000, so that's the amount for 75,000. But we still need to add an extra 15,000 to that. So 550 per thousand times 15,000 is 82.50. So how much would it be? It's 454 plus 82.50. It's gonna be 536.50. Okay. What else do we need to do? $200 deductible. Okay. So we have $200 deductible. We have to increase by $200 deductible. What does it say here? Increase the premium by 10%. Okay, so how do we do that? 536.50 times 1.10. Okay, that's the 10% more. $590.15. And then plus the PST. So 590.15
Times
times
one.
1.07. $631.46. Okay. This is a loaded question. It's a big question. So I'm just gonna point out in here, this is where with 10% increase, and then this is the one with 7% PST.
And works out to about $52.62 per month.
Yeah. Per month. Okay, so I'm stopping right here. Tomorrow we'll continue on with the rest of these, so